What happens when a president ignores economic warning signs? In May 2025, Donald Trump's chaotic pivot from promised tax cuts to a barrage of tariffs is sending shockwaves through the US and Canada, threatening the financial stability of both nations. Just 101 days into his term, Trump's aggressive trade policies, slapping 25% tariffs on Canadian goods and up to 145% on Chinese imports, are backfiring. The U.S. economy shrank in the first quarter of 2025, with GDP contracting for the first time since the COVID era, a direct hit from Trump's erratic tariff rollout. Markets are in turmoil, with the S&P 500 down 10% since December, the worst 100-day drop since 1974. Businesses are freezing investments, and consumers, already battered by inflation, are bracing for higher prices on everything from cars to groceries. In Canada, the $2.6 billion daily trade with the U.S. is under siege, with steel, timber, and oil exports facing crippling 10 to 25% tariffs. Economists warn this could push both nations toward recession, with U.S. gas prices already up 5 to 10 cents a gallon and Canadian food costs projected to rise 3%. Trump's claim that tariffs will fund a golden age is crumbling. Experts say they'll add $29.8 billion in costs to consumers while failing to revive manufacturing as promised. His own party's tax cut plans, meant to offset the damage, are faltering as bond markets signal higher debt and borrowing costs. Across the border, Canada's fighting back with $155 billion in retaliatory tariffs, hitting U.S. goods like whiskey and cars, escalating tensions. Trump's refusal to heed warnings, dismissing dismal GDP numbers as Biden's economy, is a risky gamble that could define his presidency as a failure. With midterm elections looming, this economic misstep might cost Republicans dearly, leaving working Americans and Canadians to pay the price for his reckless trade war. Stay with us as we unpack the fallout and what it means for you.